Hey traders, checking in on the stock market today. So the bears did not prove follow through after the weakness that we saw yesterday. That has certainly been a theme in 2020. Had some trades that I will go over. The theme for me today was adding to winners. It worked for Tesla. It didn't work for QQQ bearish. I'll go over them both.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So the buy the dippers were out in force today. We knew SPY, anything above 351.26, just a daily high or low, right off the daily EMA 12 support. Bulls are trying to set that daily high or low. So I want to zoom in and say, have we changed the hourly trend? I would say no, not at this point. We pretty much had the open, had the bulls control most of the day, and we didn't really see a clear hourly higher low and higher high. So we do need a little bit more proving to be done into tomorrow. But if the high of today breaks tomorrow, daily higher low is set, and we're looking right back at the recent high of 362.78. IWM certainly remained strong overall. Even our short-term little level of support, 174.28 held, and we're looking right back up at the all-time high, 179.72. QQQ. So again, I had a short position from the daily lower high, and the bulls bought the dip. We knew anything above 288.12 was a daily higher low, so certainly anticipated that was the most likely scenario, but it's the difference between a quick higher low favoring continuation or setting up for the possibility of an equilibrium to play out. And obviously this, at the moment, is favoring the bulls with the buying of the dip that took place today. We had a little bounce, a little quick hourly bull flag, and then confirmed it. One thing I am watching overnight on the futures chart is an hourly downtrend of resistance. And I had it drawn, need to adjust it a little bit because I had it drawn like that, but obviously we got right over it and then pulled back. So I would adjust this trend line and go right there and see how many times we've hit this level, and the answer is a lot over the last few days. So pulling back under that level for now. On the 4-hour chart, it's a move straight off the low of consolidation, so we may need to see a 4-hour higher low try and form overnight and into tomorrow, and that is a reason that I'm keeping my short on. And again, that reasoning is because I'm comfortably profitable. My break even is 294 after taking partial profit on that position. So I will either stop out at break even or take a small loss, but I am going to let it play out a little bit further. And again, that's just because I have that cushion to work with and because it is a smaller position size. XLF broke the daily higher low of 27.13. We got 11 cents of follow through, and then the bulls bought the dip very significantly. Again, not a crystal clear hourly trend change here, but notable for these bulls to keep their control at this point. Can't even see 2 red days in a row. We know the bears don't have any follow through as long as that's the case. XLV, daily downtrend confirmed. If we were to go straight into a bounce from here, we know that a trend change with zero follow through means zoom out and look for the potential of a flag. Could this be a weekly bull flag? I would say if this is the low of our consolidation, it would be possible. So that pretty much means we need to bounce and change the daily trend into first thing next week, if that were going to be the case. But XLV at the moment is currently the most bearish of all of our major sectors, as it is seeing weekly consolidation underway, and nobody else is currently. Biotech sector, still holding extremely strong daily inside bar today. Didn't even break the low of yesterday after that close at the low of yesterday. So again, just no bear follow through. SMH, could this be a little cup and handle pattern? 4-hour time frame. It's not your crystal clear pattern, but it's your left side of resistance. The key and the number one reason where I tell people, nope, that's not a cup and handle, is because the right side of the cup is already above the left side. The key is you have to reject from the left side of the cup, because the psychology is you then see bulls take profit and you see bears jump in on the resistance rejection. We form a bull flag, and then all those bears get stopped out and we take out 2 resistance levels on the same move. So it would be possible for SMH to be a cup and handle pattern here, and you can see it on the daily there. Short-term resistance 202.31, 202.89, And we'll see if the bulls get follow through tomorrow. TAN, still sideways. As long as this daily EMA 12 holds, the bulls have control. Just not a whole lot of strength since we have topped out just about 2 weeks ago. Just a little slow grind up. Bears are not getting follow through, that's for sure, but not really as exciting a sector as it was over the last month. In the VIX, weak bounce, 0 follow through. Can't even put together 2 green days in a row. Haven't been able to do that since the end of October, and that was when SPY set its weekly higher low. So bulls, successful dip buying all around. XLV is the weakest still. I am still in my QQQ short that I will stop out of at 294.01. Little bit of weakness in QQQ after hours here, but not significant. Onto the metals. We got the metals trying to hold this low. Look at that 1850, 1852 double bottom. 4-hour trend has to change from here if that daily higher low is going to be set. So wherever this move tops out, we're going to be watching the EMA 12 resistance have to form the higher low and higher high. If the bulls can pull that off into tomorrow, we zoom out. Anything under 1900 would just be a daily lower high. We have to break 1900 to confirm the daily trend change. So metals are on the verge of a key support break. This is the bulls playing defense. They certainly haven't done much in terms of playing offense at this point. Silver, daily higher low was 23.78. That level broke, but I'm pretty much viewing it as high and low of that candle, lower high, and the bulls need to hold 23.57 to try and form a higher low, and we held that by 7 cents today. So both gold and silver testing the low of that dump candle from 2 Mondays ago when we had the first big vaccine news. Miners, so we did drop to the lower low, bounce today, not significant at all, no real follow through, no hourly trend change for the bulls, and just watching to see if the metals can hold their support, because if they can't, we're going to see another leg down in these miners, it looks like. And we'll be closing in on daily oversold conditions if that were to take place. Again, I am still in a GLD swing position, but I am on the verge of stopping out of that as well to keep that loss small, because the premise of that trade was I'm going to make an entry in case this is a monthly bull flag, and if that support level breaks, then the odds of a monthly bull flag decrease significantly. And I'll have a lot more opportunity for entries during consolidation if I want them, if we do see another leg down. Oil. So oil, pretty much a daily inside bar today. We broke the low of yesterday by 4 pennies. That's not convincing. High, low, potentially a lower high if the bears can get a little bit of follow through, and then we'll look for a higher low, anything above 40.33. So not a whole lot going on in oil today. Natural gas. Daily downtrend continues. Little bear flag. We never changed the 4-hour trend. Weekly time frame, EMA 12 supports being tested. I talked in a recent video how that means less to me because it has not come into play as support. And we're just watching for a daily trend change back to the bulls to indicate that our weekly higher low has been set, but there's no sign of that at the moment. Nope. Have to be patient. Next time we bounce, anything under 270, just a daily lower high. So let's go over a couple trades. One thing that I'm going to be working on in 2021, every year I do a trader's resolution video for the new year. And in the next one, I'm going to be talking about how I want to practice more adding to my winners. And I'm not generally swing trading many positions, so I don't really have a ton of opportunity to add to winners, but you could do it day trading as well. But just in these examples, I had 2 swing positions, QQQ short, Tesla long. Both worked well overnight. QQQ opened lower, Tesla opened higher. So I traded them both again. And what I did on QQQ is I watched the morning bounce play out, and I said, okay, we're watching for an hourly lower high to form. I'm saying anything under 293.02 is an hourly lower high. So after the initial strength this morning, I am then watching for a bearish entry for that hourly consolidation. And we had a clear 5-minute uptrend, and it just started to lose momentum. And it started looking like either a rising wedge or a head and shoulders. There's your rising wedge. Head and shoulders that I was playing off of, I was going for more the head and shoulders than the rising wedge, but it was this left shoulder, this head, and I shorted this bounce. So made a bearish entry here at about 291.40s. Put my stop at 292.01 to give wiggle room, anticipating a lower high and a loss of the 5-minute uptrend to indicate hourly consolidation was then underway. Obviously, we didn't set a lower high, but we essentially double topped at the high of the day by 4 pennies. And because I gave wiggle room, I stayed in that trade. And we pulled back. We confirmed the 5-minute downtrend. As soon as the 5-minute downtrend confirms, I zoom out and check on that hourly chart. Say, okay, what's the most likely scenario? Because of the size of this bounce, the most likely scenario is an hourly higher low. So the position that I added, I doubled down. I doubled the size of my short. And I said, all right, I'm going to cover this position today because I'm not going to swing with double this short unless we were, to collapse with some kind of massive bear volume, which I wasn't expecting at all. So it was just a day trade at that point. And as soon as I saw the 5-minute trend change bearish right here with 0 follow through, and as soon as we saw this little bounce, okay, still weak. As soon as this candle showed up, I said, all right, now I got to be worried about a hourly bull flag. That's entirely possible. And then I watched this next 15 minutes, and then I stopped out break even because it's not worth the risk. It's too much. It looks too much like an hourly bull flag, and it was indeed an hourly bull flag that ended up confirming. So stopped out break even, and what that does is it puts me in a position to compound on my gains that I'm already winning on, or in the initial entry, my risk was 65 cents, and my position was already up $2.65. So essentially, I was risking 65 cents out of that 265 to make that entry. And then once we got that 5-minute confirmed trend change, no risk on that trade, going break even, worst case scenario. So again, I always love putting myself in positions where I can only win. And eventually it worked out to be that way. Didn't win on that position in this scenario, but kept to no losses. So I am still swinging that second half of the position because of that hourly downtrend resistance line that we're rejecting from, and knowing that we may need to see 4-hour higher lows form on that NASDAQ futures chart before these bulls are going to get daily bounce follow through. And again, it's a small enough position where worst case scenario, we gap up 1% plus and I take a quarter to a half a day maker loss. No biggie. Other trade today, Tesla. This is free money. So a free money trade, and again, you have to have the experience to know what a free money trade looks like, but this is an example and I'll go over it. So Tesla, we know the all-time high is in the 502s. And we started the morning and someone was asking about, can we top fish $500? Or no, can we top fish 502 resistance? And my response was, if we're going to break $500, we're very likely to break 502. So $500 is the level to be watching here. We rejected from it first thing. We pulled back pretty hard, battled to hold that 487. We then formed a lower high, higher low, got real tight, held this little support level, and then the bulls took off. Look at that volume pour in. So what is the gimme free trade here? The free trade is a stop buy. Because as soon as we reject here, and reject here, and reject here, I can say, okay, the bulls are putting up a good fight. At this point in time, QQQ is at the high of the day on a nice bounce. I say, all right, the QQQ bulls are doing what I want to see happen in the sector, or I should say in the NASDAQ. And now we know every time we reject from 500, shorts are building positions. And we even had traders in the chart guys top fishing here, going bearish and getting a small win. Not a whole lot of follow through, but seeing the clear resistance and playing off that clear resistance. So we know there's people that are going to buy a break of 500 bullish, and we know there's shorts that are going to cover their positions on a break of 500 bullish. So I went real big with a stop buy on a $500 resistance break. And by real big, I mean I got my swing position, and the day trade position that I entered was over 600% larger on that stop buy. And because it was so large, I instantly start scaling out. Because the last thing I want to do is go really large and then have something go terribly wrong. Because even if I'm 95% confident in that trade, 1 out of every 20 times, I'm going to lose. And if I'm in a huge position and we just dump all of a sudden, next thing you know, I got a weak loser, and that hasn't happened in a long time, and I don't want that to happen in a long time. So as soon as 500 breaks, I start scaling out. So I scaled out half of my position. I think my entry was 550 cents. I got a pretty good fill. And I exited half of that $2 higher. Why? Because the all-time high was in the 502s, And there is a possibility that we could break 500 but reject from the all-time high and then drop, $7 real quick if we were to get a hard rejection there. So by selling that half real quick for a $2 gain, sure, I'm leaving money on the table, but knowing it's so large, my break even is now $498.50. It gives me a little bit more breathing room. And on this move, I just scaled out from there. So I sold half of my position, then I sold 25% of my position, and then I sold another 25% of my position, and now I'm back to only my swing trade, and that ended up being a day and a half maker day trade because I went large on that break. From there, I just let it play out and knew it was a 5-minute rising wedge here as well. They are everywhere these days. So 5-minute rising wedge, however you want to look at it. Probably draw it a little bit tighter here. Right about there. And a very clear rollover. And I typed in the chat room, Tesla looks like it's about to roll over right as it started happening. And it was a pretty significant pullback, but there was a play off the low of the day. And I ended up playing that bounce. Would have gone bearish if I had more time. I honestly didn't have enough time before I recognized what was happening. But I did play off 493. And I made an entry in the low 495s, just playing that little bounce at the end of the day. And then heading into the close, I said, if we close over 500, I'll swing this position. If we close under 500, I'm selling. We closed just under it, I sold. I'm no longer in Tesla, locked in those gains, nice overnight win. It's been a nice winner the last 2 days, and I really like sleeping in cash. It's definitely, there is not an opportunity cost, that's the wrong word, but it has to be a significant amount of profit potential for me to swing a position, because it's psychologically, I am a happier person when I am all cash and not thinking about anything, because I wake up, if I roll over at 5 a.m., rather than just rolling over and going back to sleep for another hour, I roll over and I look at a chart and say, okay, how is the morning shaping up? How are we setting up? How is my position looking? And I don't like that. I don't like doing that. So I love being all cash, and it's worth money to me. How much is it worth for me to be all cash versus in a position and have that ease of mind? I love not thinking about the market once after this video is done into 6 a.m. the next day. Don't think about it once. And that's how I prefer to be. So I'm no longer in Tesla. I'm still in my smaller QQQ short. I'm in my GLD swing. I've got my SPY no touch. I've got my crypto swing positions. And that's about it. It's been a solid month and just looking to keep hitting base hits into the end of the year. And that is that. Hope you have a good day. Don't forget to do good things out there. And we will see you soon. So I'm out of end of video content here. We're going to go back into the archives. This is from 11 years ago. The original video is like 45 minutes long. I've edited it down into about 10 or 12 minutes, cutting out all the illegal activities. But essentially it was sophomore year of college, and watched Into the Wild and was inspired and just said, all right, we're going to Yellowstone. I'm going, whatever break we had, who's coming with me? So a few of my buddies jumped on board. We took a car 36 hours straight to get there. We went into the backwoods for a week. We did a week-long hike, and we made so many mistakes. We were so dumb, but it was so much fun. We didn't bring anywhere near enough food. I went into the backcountry of Yellowstone. We were hiking 6 to 8 miles a day, and I brought a backpack. I didn't even have a camping backpack. We didn't bring anything in terms of sleeping mats, and we had a tent that fits 4 people, and it was 4 of us men. So we were literally cigar-shaped, 4 of us in this tent, and we ran out of, we were hiking on fumes. Essentially, we had a ramen noodles pack every night to be looking forward to, and we're really lucky to have made it out alive. So here is the PG version of Yellowstone trip. Let's see, at that point in time, I was 20 years old. I wasn't even 21 yet. Maybe just 21. Here we go.
Oh, there it is.
Good day.
I'm not about to shred this. Dan, you just hop yourself out that top window there.